Okay, so let's start our contents today. Today is Friday, right? End of this week, and so I want to share with you something special, especially for those who only trade Singapore stocks or who trade more Singapore stocks. Today, I will give you a special topic about Singapore stocks, how to dance at a market beat. So today, I will teach you how to dance at the market beat of Singapore stock market. If you are interested in Singapore market trading, you definitely don't want to miss today's contents. It will be really helpful for you, all right? And the second part for today still is about individual stock diagnosis, but I suppose that today, because many of you don't know that I already changed to a Restream platform, right? So maybe you don't know I'm doing the live broadcast now. Maybe later I will inform you, all right? But maybe you don't know, then you don't have stocks to WhatsApp me, right? So maybe today, this part we can skip. Individual stock diagnosis for the day, we skip for today, all right? Okay, so firstly, before we start, I still need to remind you that all the stocks mentioned in the video for the purpose of demonstration and education. Now, recommendation: investors should be aware of the risks involved in stock trading and take full responsibilities for their own tradings. All right. Firstly, let's check the market performance. It's very important for US, right? So no significant progress has been made last night, because we checked, this is Nasdaq, right? So Nasdaq rebounded, of course, but still below the strong resistance level around the 11,900 level here, which is the high of the previous yellow Tai Chi, and also the half of this long bearish candle, and also the high of this previous rally here, right? So this is significant resistance. Last night, the price touched, but didn't really break up. We need to see whether or not the price can really break up, or it cannot break up and then drop further to touch the support below the previous bigger upward gap here, right? This is for Singapore markets. For Nasdaq. And then for S&P 500. S&P 500 also rebounded yesterday, but still below the half of this long bearish candle. Long candle, half body, strong resistance, I mentioned many times. So if price unable to break up, higher probability still price will drop further to touch the support levels below, okay? Then for Dow Jones, although it also rebounded, but it's quite weak, because it's still quite far away from the half of this previous long bullish candle here, Wednesday, right? The Wednesday long bearish candle here, Wednesday, still far away below the half level, although last night's rebounded is a weak rebound. Okay, so for US market, we still need to keep a close eye on it. And then for Singapore market also, yesterday after market closed is still around the high of this previous yellow Tai Chi signal, right? The previous yellow Tai Chi signal here. Today it went up. Now it's already 2,800, right? So STI today still remain quite strong above the high of the previous yellow Tai Chi, but not sure this is a real breakthrough or a false breakthrough. Still need to monitor. Okay, so this is briefly we talk about the market performance, and then secondly, I want to share with you how to dance with the market beat, or how to dance at the market beat, because many people feel that, wow, when they check the stocks already high, for example, recently all the blue chips and the banks, UOL, Thai Beverage, a lot of blue chips have been quite high, and they miss it. And then when they want to buy already high, then how to dance at a market beat. Many people don't know how to deal with it, right? the reason you don't know how to dance at the market beat is because you don't know the different categories of Singapore stocks. Singapore stock market is not a very big one, right? But it still has its own categories. If you know the different categories, and different categories would act differently based on the general market performance. So you need to know the categories, and when these different categories of stocks would have opportunities for you. If you know that, of course, you can dance at the market beat. Okay, so firstly, let me share with you the categories, right? So the first category of Singapore stocks, that is the blue chips following STI. This is the first category, blue chips following STI. For example, recently the banks, DBS, UOB, OCBC, right? And then UOL, and Genting, and Thai Beverage, and SATS, and ST Engineering. These are all blue chips, and they follow the index STI. The reason why these stocks become so strong, that's because our STI become quite strong recently. It's reversing from medium-term to long-term bullish. That's why these stocks are all reversing to bullish, medium-term to bullish, medium-term to long-term bullish, right? And then the best strategies for this kind of stock, when STI turn to medium-term to long-term bullish, we buy and hold for medium-term to long-term. This is the best strategy because you know what? Before this recent forceful rally for STI, before the U.S. general election, let's put it this way, right? Put it this way: before the U.S. general election, our Singapore market still remain, let's say, volatile. For medium term to long term, it's still downtrend, right? But after the general election, the market become quite strong because the results turned out to be quite good. We quickly got a confirmed result for the U.S. general election. Good news stimulated all the markets to go up, right? And then before the general election, right? And if you try to trade these stocks, Genting, UOL, Thai Beverage, SATS, you realize that no profits. And that's the mistake which have been made by many Singapore traders. When the market is quite weak, it's in the downtrend for medium term to long term, they just stick to the blue chips. But remember, these blue chips would follow the index. If index remain bearish, volatile, they also would remain bearish and volatile. When the market is bearish and volatile, you trade them, no chance to make profits. So means before the U.S. general election, the best strategy for these stocks, you better not to touch, or maybe for very short-term rebound you want to catch, that's bottom catch, not really recommended for beginners, right? So you better not to touch them. So what are the stocks that may give us the opportunities before the U.S. general election? 3rd November, right? 3rd November, which will be the second type. The second type of Singapore stocks, we call them, oh no, it's the third type, all right? It's the third type. This type of stock would give you the best chances, best profits when the market is weak or volatile. They are called the medium and small size stocks, and they should be active, right? Active means at least the amount should be more than 1 million. The candlesticks should be normal candles rather than the unhealthy, abnormal candlesticks, right? For example, we know that before the U.S. general election, which are the stocks which that had been quite strong? iFast, and Jiutian Chemical, right? Jiutian Chemical, I didn't put it here. Jiutian Chemical, iFast, Sembcorp Industry, and SunPower, AEM, and also Venture. These stocks have been quite strong when the Singapore STI downward and give us a lot of ups and downs, volatile. You can look back and check whether this is the case, right? So actually, for these kind of stocks, if you want to catch the opportunities, you only have to follow the trend and also the bankers, which means the big boys, to trade for short term to medium term, so you can make profit. And the best timing to trade these kind of stocks would be when the market is quite weak or quite volatile. And when the general performance is weak and volatile, these stocks with big boys taking control, they are usually very strong. For example, let me switch back to the software for you to check. Let's say iFast, right? Okay, so if we check iFast, I was since here, that's April 24th, right? April 24th, the price break up the white lines of Homely Rainbow, right? Break up the white lines of Homely Rainbow, and I was since that it remained in medium-term to long-term uptrend. The price never dropped below the yellow lines of Homely Rainbow, right? And then when here, firstly, the big boys increased to be more than 50%. That's this candle. That's 1st June, right? 1st June. And ever since that moment, the big boys never dropped below 50% level. That's why for this share, it can be so strong until now, right? And what we know is, ever since that moment, for our STI, still, generally speaking, downward, right? STI still down, or quite volatile, give us ups and downs, sideways there, right? But our iFast already reversed long-term, medium-term to long-term bullish and big boy, because the reason is because the big boys take control. So you only have to follow the big boys to trade this kind of medium-sized stocks. This is medium size. When it reverses to long-term bullish, that's around $1 medium size. And of course, after the rally until now, it's already tripled, more than tripled the profit here, more than tripled. But the key point is when the market is weak or volatile, general STI is weak and volatile, you have to find this kind of strong stocks, stronger than index. And these kind of stocks, usually they are not the big blue chips. Usually they are the medium-sized stocks and they are the active stocks. So this kind of stock, best strategy, you follow the big boys and also the trend. Let's say if you trade for medium term to long term, because it's a stock controlled by big boys, right? Then you buy here and keep holding until now. Okay, this is for medium term to long term trading. For short term, you follow the red and white circle. When the market is volatile and weak, this kind of individual stock, you follow the first red circle to buy, first white circle to sell, buy and sell, buy and sell, and recently, first red circle, and we're waiting for the confirmation to buy, right? Buy and hold. So this is the medium size and also small size stocks, which the best strategy is you follow the big boys, because not all of them are so strong with big boys taking control. You need to check multicolored dragon to find the strong ones with big boys taking control, and then just follow the Homely Rainbow or red and white circle to trade for medium term to long or short term. All right, this is iFast. But you know, before the recent Singapore market reversed to medium term to long term bullish, let's say we check STI first, right? You see, recently our STI here is trying to break up. Now it's above the white lines of Homely Rainbow. We say this is long-term bullish reversal, right? Our STI is around the brink of long-term bullish reversal, and that's why the first type of stocks, first category of Singapore stocks, the big blue chips following the index, they all have moved in the same pattern recently, right? You check DBS. This is Singapore. Remember the look, right? So the price break up the white lines of Homely Rainbow after the recent forceful rally, right? And then DBS. See? Also break up the white lines. And then Thai Beverage. See? Break up the white lines of Homely Rainbow. And SATS. Okay, very strong, right? SATS very strong. Look similar as the pattern of the STI because they are following the STI. The big blue chips, they're following the STI. And then we have lots actually moving in the same pattern. ST Engineering as 63. You see, all the same. This one now you see already confirmed reverse to long-term bullish, right? So this kind of stocks, the best strategy is when STI is reversing to long-term bullish, right? This kind of stocks you buy and hold for medium term. Let's say for example here, when the price already above the white lines and then drop to test the support here, then turn upward again, you buy here, right? You buy here, you can hold for medium term to long term, you know? You can hold for medium term to long term. And because for the banks, now when the market break up the white lines, it went up so fast, many people didn't respond in time. So what you want to do is wait for the correction in near future. Wait for the correction and then buy at a lower position and hold for medium term to long term. All right, so this is the best strategy for the first type of stocks. When the market remain bearish or volatile, maybe you don't touch them. But when the market reverses to medium term to long term bullish, you buy at a reversal of around the reversal points and then hold for medium term to long term. This will maximize your profit. All right. This is the first type and the third type. And also we have a second type. The second type of second category of Singapore stocks would be the blue chips weaker than the STI. For example, we have telecommunication stocks, Singtel and StarHub and Dairy Farm and SPH. Today, some people ask me about SPH, right? And for this kind of stocks, usually they are slower than the index. When the index really become quite bullish, turn to really bullish, they would slowly follow, but they usually fall behind. They respond usually more slowly. And means what? If, let's say recently for the stocks exactly following the STI, they're already high, right? DBS sites, they're already very high for short term. And for these stocks, actually, they just slowly beginning to go up. So for this kind of stocks, they are not the best choices because they are weaker than the index, right? But if you want to dance at the market beat, when recently market about to drop, maybe these stocks, because they respond more slowly, right? And then some of them just about to let's say go up, and then you can try some short-term trading. Try some short-term trading when STI is turning to a medium-term to long-term bullish. But this kind of stock better not hold for medium-term to long because they will always be weaker. And for taking SPH as an example, right? Because today some people ask me about SPH. T39. Where is SPH? Okay, let's check the end of the chart first, T39. You see, until yesterday, right? Until yesterday, it's still just around the yellow lines of Homely Rainbow. So it's still quite weak, right? But today it moved up a lot. Let me, T39, right? Wow, what's wrong? Change the market first. I think I'm staying at Singapore. Never mind, let's change the market. T39. You see, today it began to go up at a forceful speed, right? So it's quite a forceful rally today. So for this kind of stocks, they are slower than the index. When index now it's already very high, maybe in near future about to drop, maybe, right? And then they are just beginning to go up. And if you really want to do some speculation, this kind of stocks, you can check the mini chart to catch some short-term rally. For SPH, for example, today it's trying to break up the blue lines, and then if it break up, the next target level would be the white lines of Homely Rainbow, right? White lines of Homely Rainbow. But this kind of stock, just a short-term speculation. You earn some profits, then you just leave quickly because you're just doing speculation based on the fact that they would be slower, much more slower than STI performance. But it always have to catch up with the STI, right? So after the STI already up a lot for short term, maybe they just begin to go up. Then you are trying to catch this time difference, okay? This time difference to catch some short-term speculative profits. Okay, so this is the second type of Singapore stocks, all right? This is the second type. And the third type I already mentioned. This kind of stock, especially when the market is volatile or weak, single STI, volatile or weak, you trade these stocks. That will be your best choice to give you the biggest profit. Sembcorp industry, right? Recently, or before the recent correction, previously quite a forceful rally for you to catch the short-term to medium-term profit, right? Okay, so and then when, let's say now, when the STI is reversing to medium-term to long-term bullish now, maybe for these stocks in future, they would turn weak or they would drop because this is the market is rotating, the stocks are rotating. No stocks can just go up all the time, right? Previously, when STI is weak and volatile, these stocks already gone up a lot. And then for them, maybe in future, they would drop, they would correct first, give us big corrections first. Means for this kind of stocks, for now, you can check the indicator for in future, right? How to deal with these stocks in future. You check the candlestick chart to do some short-term trading. You follow Ray Anwar circle to do some short-term trading first. For example, iFast. I also bought iFast. Yesterday, I bought iFast. Actually, it's not a real safe buy point. We say iFast. We got the first ray circle, but the first ray circle hasn't yet been confirmed because now the close price is still below the high of the first ray circle candle here, right? But because I'm a disciplined trader, I have experience. So if the price unable to break up the high of this first ray circle candle, I will stop loss quickly. So if you also can do that, maybe you also can buy earlier before the price really break up the high of the first ray circle. But if you are not that good at stopping loss or trading skills, maybe you better wait until the price can safely above the high of the first ray circle candle to high. For iFast, I'm planning to trade for short term recently. So for short term trading, I still can do it because the big boy is still quite strong here. If in future the big boys decrease and then lose the momentum, then I will never touch it again. Okay, because previously when the index is weak or volatile, already gone up a lot for iFast and also for Sembcorp Marine or the SIM. You see, already quite up a lot. So in future, when ISTI become bullish again, these stocks might drop. So this is the rhythm of the market movement, and then our focus should shift from these stocks to the big blue chips like DBS, SITES, and Thai Beverage and UOL, these stocks, all right? So this is the first three major categories of Singapore stocks, and also we have several other. This is the third one, right? The first type we have some stocks related with important social, economic, or political events. For example, the COVID-19 has made the healthcare stocks, Singapore healthcare stocks, quite strong before, right? But that's already the history. Because now the COVID-19, although it's becoming more and more serious, but the vaccines are coming out very soon. So for these stocks, then they have gone up a lot previously. Now they are quite weak. You check MedTech and UG Healthcare and Riverstone, all these stocks. Now they are already not our best choice. Now they are weak now. So it's not the timing to consider these stocks now. All right. And then the best strategy, also you follow the trend and bankers to trade for short term to medium term. Previously, right, you already, maybe you secured a profit, but when the upward momentum turn weak, you need to leave. For example, MedTech, right? MedTech, you see ever since here, 21st October last month, the price already dropped below the yellow lines of Homely Rainbow. So based on our trading principle, you already have left here for medium term to long term trading. You already left. Until now, it still remain weak. So the best rally, the biggest rally already become history for this kind of healthcare stocks. Okay, so that's the first type. Okay, first type, and then the last type, the fifth type, that's some penny stocks with beautiful chart pattern, but the volume just a bit low. They're not very active. This is also one type of Singapore stocks. Okay, so this is Singapore special, Singapore style. And for example, we have 1F2, NC2, W2Y, this kind of stocks. Let me show you. 1F2. See? You can see they're still in uptrend, right? They're still in uptrend. Even it has a lot of big boys, the chart pattern is quite beautiful, right? Only that they can be very slow. You see? They can be very slow. If you have patience, maybe you can also consider, but they are not our first choices. If I have better stocks, I will not take these kind of stocks. Okay, so we have Aspen also, right? Aspen 1F3. You see? You can see they're still in uptrend, but this one the chart pattern is not that beautiful because we have too many retailers, too much retailers, and big boy is not stable. This chart is not as beautiful as the 1F2, right? 1F2 is much more beautiful, Union Gas, but even for Union Gas, it's quite slow. You need patience, and they're just not our first choice, all right? And then we have the last type of stock. Last type, we call it penny stocks, extremely inactive with unhealthy candlesticks. This kind of share you should never touch. You should never touch this kind of stock. I know some investors who have a lot of this kind of stocks. Then how can you make money if your stocks all look like this? I'll show you example S7P. We have a lot such kind of stock in Singapore, you know. That's why I want to mention it, so that in future you will avoid, right? So you see the candlesticks, abnormal candles, a lot of dashes and sudden big long candles, big long green, big long red candles. So the price movement has no regularity to follow. So this kind of stocks, inactive stocks with unhealthy candlesticks, never touch. We don't need to check any indicator, just stay away from them, keep away from them. All right, so that's for today's sharing. And finally, because this weekend, right, this weekend we have splendid seminars for you, arranged for you. So this Saturday morning, that's the English session. English session, 10:30 a.m. to 12 p.m. So 3 steps to grab the year-end opportunity. This is a very good one. And also Sunday, right? Sunday afternoon, 2 to 4 p.m. There is another one, the same topic, but different language. Saturday is English, Sunday is Mandarin. So you can check which language you prefer. Then you can WhatsApp me to register for these 2 seminars, all right? So if you want to WhatsApp me, this is my WhatsApp number, 92312309. Okay, so that's all for today. Wish you a nice weekend. All right, see you next Monday. Bye-bye.